Hello all, good evening. So yesterday we have started the introduction to the IDT. So quickly we'll have a recap of it for 5 minutes. Then we'll be going through the other part. Okay. So now initially we have discussed about indirect tax mechanism. What is indirect tax mechanism, sir? There is a supplier who supplies goods and services. On that, the recipient will be paying to the supplier not only just the goods and services, even the tax part on it. He'll be paying even the tax part on it to the supplier. Now the supplier, when he is collecting this 1,18,000, which is including indirect tax of 18,000, this supplier will retain 1 lakh, the other 18,000 tax he will be paying to the government. Here you should remember the obligation to pay tax is on supplier. The supplier is the one responsible to pay the tax, but the burden to pay tax is on recipient. Then next, there is a seller. Okay, in seller books, we'll write down the entry for it. I mean, in supplier books. What is the entry, sir? Since supplier receives cash, so we have taken it as cash account debit 1,18,000 to sales. It is 1 lakh, and to IDT payable, indirect taxes payable, it is 18,000. Then we have discussed about the federal structure. What is the federal structure, sir? Here, central government, state government, local authority. Central government, state government, and local authority. These three can function and generate revenues independently. Central government, state government, local authority, all these three can function independently and generate their revenues independently. That's the essence of the constitution, sir. The constitution is framed in such a way that central cannot take away the powers of state and states cannot take away the power of local authorities. All these three are independent and they can function independently. Next, taxes that were there prior to GST. Okay, so the discussion is about taxes that were there prior to GST. What are those taxes? Central sales tax levied by central government, and the reason is interstate sale of goods. Even though it is levied and collected by central government, it was again distributed to state governments only. Countervailing duty, which we call it as CVD, is levied by central government on imports. Then advertisement tax is levied by state government on advertisements. Then lottery tax is levied by state government on sale of lottery tickets. Then luxury tax is levied by state government on sale of luxury goods. Octroi tax is levied by state government for allowing the person from other states to sell the goods. Octroi tax is levied by state government for allowing a person from other states to sell the goods. Then VAT, value added tax, is levied by state government on intrastate supplies. Then entertainment tax is levied by state government and local authority on entertainment events. Excise duty is levied by central government on manufacture of goods. Service tax is levied by central government on providing services. So overall, these are the taxes which were there prior to GST. So we have a code for this also, sir, which I didn't mention in the previous class. What are the taxes that were there prior to GST? Central sales tax, countervailing duty, advertisement tax, luxury tax, lottery tax, octroi tax, VAT, excise duty, entertainment tax, and even service tax. So for them, so to remember all this quickly, the code is this one. So C for central sales tax and countervailing duty, A for advertisement tax, L for luxury tax, O for octroi tax, V for VAT, E for excise duty and entertainment tax, and S for service tax. Okay. Then coming to the next topic, sir, here we have discussed about input tax credit. How or what is the input tax rate? When a supplier supplies goods to recipient or services to recipient, he will be paying the value for goods along with the tax part. The tax on his inward supply, the tax part on his inward supply to recipient will be taken as cash back, will be given back to him as cash back. which we call it as what? Input tax credit. Okay, which we call it as what? Input tax rate. When a supplier supplies goods and services to a recipient, the tax part on such inward supply can be availed by the recipient. The tax part on such inward supply can be taken as ITC by the recipient. Next, understanding double taxation and cascading. So now see here, there is a manufacturer, wholesaler and retailer. The cost here is 900 to the manufacturer. Okay, then margin 100, selling price 1000, excise duty 10%, 100, subtotal 1100, VAT 110, invoice price 1000 to 10. So in this example, what we have understand, when it went to wholesaler stage, the cost 1000 to 10, and here is valuation 100, his selling price is 1310. In this 1310, if VAT is levied again 10 percentage on this, in this 131, there is a part relevant to double taxation and there is a part relevant to cascading effect as well. So see here, 1310 is the selling price here. How we arrived this 1310? Out of this 1000 rupees is nothing but the previous stage selling price. The other 210 is the previous stage taxes. 100 alone is the valuation which I have made in this particular level. Okay, so out of 1310, 1000 is from previous stage selling price, 210 is previous stage tax price, tax value, and 100 is the valuation. If there is a tax on the previous stage selling price, once again, because this 1000 already taxed here, but again if this 1000 including in this amount, if it is getting taxed for second time, one more time, then that is called as the double taxation. That is called as what? Double taxation. Then if the same tax amount by again including in this 1310, if it is once again getting taxed, then that is called as what? Cascading effect. This is because of cascading effect. Then there is nothing but value addition 100. So on this value addition, if there is any tax, no problem. The problem is with what the problem is, sir? When there is double taxation or when there is cascading, then we are having problem. If the value addition in a stage is being taxed, then there is no problem absolutely there. Okay, so now we will be understanding how this double taxation and cascading will be avoided due to ITC. So see here, manufacturer, wholesaler, retailer, same example, sir. With the invoice price 1210, wholesaler will get an ITC of 110 because the tax paid relevant to VAT. Excise duty is not allowed as credit, that I already said. So by giving this 110 rupees as ITC, while paying tax, he will be adjusting this 110 and effectively is paying only 10 rupees to the government instead of 130. So through ITC, the tax paid on inward supply is given as credit, which can be set off with tax payable on outwards. As a result, only the value addition at each stage is getting taxed, not the full amount. Next, entry in buyer books. What is the entry, sir? Goods purchase account, ITC account. Why we are debiting input tax credit, sir? Because input tax credit is an asset to us. With input tax credit, we can adjust the tax payable on our outward supply. It reduces our future cash outflow. So it is an asset. Next, need for GST. What is this, sir? The central sales tax paid on interstate sales is not given as ITC. The first reason, sir, why there is a need to introduce GST. The first one is what? The central sales tax paid on interstate sales is not given as ITC. Second one, even the excise duty paid on manufacture of goods is not given as credit to traders. Excise duty paid is given as credit to manufacturers, but not given to traders. Then third one, non-integration of VAT and service tax. Non-integration of VAT and service tax on a single works contract. Okay, a contract which involves both supply of goods and services, we call it as what? Works contract. In that contract, both goods are involved and even services are involved. But since goods are involved, VAT is levied. Since service is involved, service tax also levied. So because there is no coordination, integration between VAT and service tax, on a single transaction, both VAT is levied as well as service tax also levied. Then non-inclusion of several state levies into VAT, luxury tax, lottery tax, all these are state levies. They were not included into the state levies. They were levied separately. So due to this, even though the revenue goes to the state government, there are separate levies which leads to double taxation and cascading. Then to bring uniformity among the tax procedures and collections across India, since there are multiple taxes, to bring uniformity among the tax procedures and collections across India, different kind of tax laws are followed. The VAT law in Maharashtra is different from in AP. The VAT law in Gujarat is different from that of Rajasthan. So every state there is a unique kind of procedure, different kind of procedure, due dates. So which has made the whole indirect tax system as a complex thing. So to streamline that, there is a need to introduce GST. Then India. So India means what, sir? India includes 28 states and 8 union territories. India includes how many, sir? 28 states and 8 union territories. What are those union territories, sir? 8 union territories: Andaman Nicobar Islands, Lakshadweep, Puducherry, Delhi, Chandigarh, Daman and Diu, Dadra and Nagar Haveli, Jammu and Kashmir, Ladakh. But out of these 8 union territories, there are 3 union territories which are having separate state legislature: Puducherry, Delhi and Jammu and Kashmir. Remember this. If it is a general knowledge question, there are 8 union territories. But if it is related to GST, how many union territories are there? There are only 5 union territories. These 3 union territories, Puducherry, Delhi, Jammu and Kashmir, since they are having separate state legislature, for the purpose of GST, they are also treated as states. So that means for the purpose of GST, it's not 28 states, 28 plus 3, total 31 states for the purpose of GST. Remember this. Okay, so the India definition, it includes 28 states, territorial waters extends up to 12 nautical miles from baseline, exclusive economic zones extends up to 200 nautical miles from baseline, and the seabed and subsoil beneath the water, and even the airspace above the Indian territorial waters. Okay, so I hope you are having clarity. So now we are good to go with the new concepts. So we'll start discussing now, sir, the constitutional provisions. So everybody try to write the notes along with me. Constitutional provisions. In this, we'll discuss about Article 246. Article 246. Article 246 consists, it has a 7th schedule. Article 246 has 7th schedule. This 7th schedule consists of 3 lists. Article 246 has a 7th schedule which consists of 3 lists. What are those 3 lists? Union list, state list, concurrent list. Union list, state list, concurrent list. So union list, sir, what are these union list, state list, concurrent list? As I have already said, our federal structure, our federal essence says like that the powers of central and state should be different. Okay, they are independent. So that's why the Article 246 Seventh schedule will also outlines like the matters on which central government can generate revenue, or the matters or the transactions through which the central government can generate revenue are listed out in union list. The list of items or transactions through which the state government can levy can generate transactions are given in state list, and there are certain matters which are there in concurrent list. On them the central can frame law, state can also frame law. If it is in union list, let's say if something, let's say environment related, on them, if it is let's say in union list, on those items are related to environment, a law can be framed only by central government. If that is there in state list, then a law can be framed only by whom? State government. So like that, there are certain matters which were there in union list on which the law can be framed only by central government. There are certain matters which were there in state list. On them the law can be framed only by state list. There are certain matters in concurrent list. On them central can also frame law, state can also frame law. So overall the article 246 gives the power to frame a law. The power to frame a law is given under article 246 7th schedule. Okay, so an example for which would be there in union list na income tax. Sir, all these you will know. These are basic things only. State list na property taxes. Sorry, not property taxes. On property registration, there will be stamp duty, that one, and even sales tax. Concurrent list na related to the criminal procedures. Okay. So now need to understand how GST is there, how GST is introduced. So to introduce GST, what kind of constitutional amendments are made? Okay, so that I'll explain, sir. You need not to write. So I'll tell once again when you need to write also. Let's say, sir, we all know out of indirect taxes, certain are levied by central government, certain taxes are levied by state government. But now what happens? A single tax, because all these previous taxes, the CA allows central sales tax, advertisement tax, luxury, lottery, octroi, entry tax, advertisement tax, VAT, excise duty, entertainment tax, service tax, all these taxes has to be merged and a single tax has to be formed. Out of them, certain are central government related and few are related to state government. The question is, if a single tax is framed, who will take care or who will be administering or who will be implementing this single tax? Obviously, there are multiple state governments. We already said like 28 plus 3, 31 state governments, whereas one central government. So it is easy if the administration, if the implementation, everything is given to central government instead of to the state governments. If it is given to state government, then again multiple people are involved. There is a conflict among them who has to take care of this and that. So all these things will happen. So that's why what they are thinking, like a single tax, if we give a power to one person, let's say that power is given to central government, then the problem will start. What is the problem, sir? The problem is the power is currently with the states also. Whenever they want to levy a tax, they can levy because the VAT is under their control. Lottery tax is there in lottery tax, luxury tax, all these are in control of state. But now the control is going to the central government. Okay, so states are not ready to do this. They are not ready to give away their control to the central government. I mean, their revenue, the revenue which they could generate is now going to central government, and thereafter central government has to give. It is something how it is like. you guys like 20 students are there na, so all you 20 students cleared CMA and you got placed in some good companies, then whatever the salary you'll be getting na, I said simply like, so we all are like a family, we all are IDT family, so we all will have a single bank account and that bank account will be with me. Okay, that bank account, user ID, password, everything will be with me and the salary will also get credited to me. So you 20 people will work, your salary will also get credited into that account. Okay, even my income will also get credited into that account only, fine. So then one person, okay, one person, so this fellow, he got some 5 months ka salary, some 5 lakhs is there in bank account. So now he came to me and said like, sir, I'm having a dream to buy a sports bike from childhood onwards, sir. So now I'm planning to buy a sports bike. So in your account there is 5 lakhs na, I mean his 5 lakhs only, it's not mine, his 5 lakhs only. He is saying like, give me that 5 lakhs, so I have to go and buy sports bike. Then I started giving preachings, stating like, hey, why sports bike? Why this 5 lakh rupees unnecessarily you are spending? Go and invest this 5 lakh somewhere. You'll be making this amount double, triple in 3 years or 4 years. You'll be having this. Or like that I am saying, instead of encouraging him to purchase the sports bike. So okay, this fellow done. Then there is a second boy came who was entered into a relationship recently. Okay, this fellow wants to take his girlfriend to some date. Okay, they want to go to some movie or something. So he said me like, everything is into my account only. He said like, sir, I want 5,000 rupees, so I want to go somewhere else, I want to enjoy the weekend, something, he said. Then again, why 5,000? I'm asking here. He said like, me and my girlfriend are going outside, sir, I need that 5,000. So again I started giving the preachings. This love is not suitable to you. Okay, someday the girl will tell breakup, then again you'll feel, you'll suffer bad, you'll enter into depression, everything this will happen. So why this relationship, everything, so leave that. So like that again I started giving preaching. So now what these people, these 20 people feel, what this fellow is doing like, so anyhow, even though he is a faculty also, it's our money. Okay, we just kept in his bank account. Why he always saying this and that? Even my father and mother also not giving, or not putting so many restrictions on us. But this fellow is putting so many restrictions on us. Like that only you feel now. The same thing happens even with the state government. Understand? The money, the tax money is related to state governments. But now that is collected and deposited into central account, and if subsequently central has to transfer them to the states, then central will play the game with the states. So that's why states are not ready with this. They are not ready with this single tax system. If you bring single tax and such single tax administration, implementation, everything is with the central government, means the state will loses their independent status. They lose their autonomy. So that's why states are not ready for this. Then what is the solution? Then they went and thought of something called dual GST. What is dual GST? Dual GST, sir, need not to write this. We'll write down afterwards everything clearly. Okay, what is dual GST? On a single transaction, instead of a single tax, they levy two taxes. What are those two taxes? One is CGST and the other one is SGST. Let's say here 1 lakh, on this they levy CGST and even they levy SGST. CGST revenue is some 9,000, SGST revenue is 9,000. So now understand, the point is, because of this dual tax system, dual GST model, on a single transaction, instead of a single tax, two taxes will be levied simultaneously. The one will go to central government, the other will go to state government. So now there is no problem. Okay, ek mera, do tera, like that. So the central revenue will go to central, state revenue will go to state. So to reduce the conflict, or to retain that independent status of the state government, instead of a single GST model, dual GST model has been introduced. Okay, so states thought like, okay, this is fine. So we are not dependent on central government. Our revenue will be created to our accounts only. So we have that independence to do whatever they want. Okay, so then this was done. Then afterwards, again, they thought of it once again, and then a second problem has been erased. What is the problem? Let's say the seller is in AP, the buyer is in Tamil Nadu. Seller is in AP, buyer is in Tamil Nadu. Seller is in AP and buyer is in Tamil Nadu. Sir, is it intra or interstate? Intrastate or interstate? It is what? Interstate transaction. Na? Since both are in two different states. Now let's say 1 lakh rupees is the value. On this, if you levy CGST 9%, 9,000, this will be taken away by whom? Central government will take this. Now there is something called SGST. SGST also another 9%, which comes to 9,000. This has to go to whom? State government. The central is fine, sir. They took their 9,000 share. But now state governments are having a problem. What is the problem? This 9,000, whether it has to be given to AP or whether it has to be given to Tamil Nadu. So the problem or the conflict is with the states. Both the states are fighting. This 9,000 has to come to AP. This 9,000 has to come to Tamil Nadu. Okay. So, sir, in intrastate transaction, this kind of problem will not come. Because the seller and the recipient both will be in the same state, so no problem. So whether it is the supplier one or recipient will take also no problem. It will be in the same state. But here, since supplier and recipient are in two different states, there is a problem to which state the revenue has to go. So then again they thought like here dual GST model will not work. Here dual GST model will not work. That means in intra dual GST model will work. Intra dual GST, I mean on a transaction they levy CGST and SGST. But if the transaction is interstate, then dual GST model will not work. Then what to do? Then the central proposed once again like on a single transaction, on this one transaction, we levy a tax called IGST instead of CGST and SGST. What is this IGST? IGST means integrated goods and service tax. Integrated. So it's a mixture of state and central taxes together, which we call it as integrated goods and service tax. Let's say 18%, 18,000. So the question is, who will take this? This will go to central government only. Now again state started the problem. So this itself is our first problem. Our money taking away by the central is our first problem. To solve that problem only, the dual GST model is introduced. But once again, if there is a problem in dual GST, if again you take back to the single tax model, that is our basic problem. That's what states are arguing. So then for that, central promised them, see, intrastate, anyhow you are getting your revenue. Okay, so some out of 100 transactions, 60 transactions are intrastate only. So on intra, you don't have any problem. 60% related revenue without any problem you are getting. Related to other 40%, we don't have any other better option. It is better to collect by central government only, and central will give it to the states. But states, how much ever the central is trying to convince, states are not listening. Okay, you people will say now like this only, but afterwards you change words and we'll be losing our power. We are not ready to do this. That's what the states are saying. So then they thought of it, they discussed a lot and then come up with central now said like, okay, you don't believe the government which is sitting or the party whichever is in the government. Yes. Do you believe constitution? Of course, anyone in India has to believe constitution because constitution is the rule book which we are following everyone. So what the central government said like, we'll insert an article in the constitution itself like the IGST revenue or the IGST levied on interstate supplies will be collected by central government, but it has to be shared between center and states. Like that we'll insert a provision in the constitution itself. Since nobody can, everybody, whichever the government is there, even after elections come and a government change also, whichever the government comes, they cannot change easily constitution now. So that's why I mean, that point cannot be changed without the state's ratification. Majority of states should accept for that, even though after a special resolution. So that's why they said like we'll put a provision in the constitution itself, so nobody can change that. Whichever the government comes afterwards, they also have to follow this mandatory, like that they said, and then states got convinced. Okay, so that's why in India we don't have a single GST model. We have the GST model in intrastate dual GST. In interstate, it is a single tax only, but which is IGST. So, like this, to introduce GST, this much progress and this much discussions has been happened. So now we'll write down regarding these points, and then we'll take it much more further. Okay. So now keep the heading, sir. Article 246A. Article 246A. Article 246A gives the power to both central government and state government to frame laws with respect to GST. So, sir, I already said previously, like to frame laws, the power is given by Article 246, but GST is a different one. Okay, so where the central and state will together form the same kind of law, and on a similar, both on levy a supply of goods and on supply of services, central also having power, state also having the power. So they don't want to disturb the existing Article 246. So that's why they introduced a new article called Article 246A, which gives the power to both central government and state government to frame laws with respect to GST. Then Article 269A. Article 269A. It empowers the central government. It empowers the central government to levy tax on interstate supplies. Empowers the central government to levy tax on interstate supplies. Empowers the central government to levy tax on interstate supplies, which will be distributed between central and states. Empowers the central government to levy the tax on interstate supplies, which will be distributed between central and states. Okay, so we'll write down, sir, for you to understand how the taxation model is also there. Intrastate, interstate, interstate. On intrastate, there will be dual GST. On intrastate, there will be dual GST. What are those? There will be CGST, which is central tax. there is SGST or UTGST. SGST means state tax. UTGST na Union Territory tax. On interstate, there is a single tax which is called integrated tax. Which is called integrated tax. On this, IGST levied. So IGST is nothing but called integrated tax. Out of this, 50% will go to central government, the other 50% will go to state government. 50% will go to central government and the other 50% will go to state government. So this is the taxation model. Then here Article 366. Article 366, it defines GST is a tax. Article 366 defines GST is a tax. Sir, because in Constitution, see, if you see here, it empowers the central government to frame laws with respect to GST. So, and even in different places also, even in the coming provisions also, in Constitution, they have used the word GST at several places. So that's why they need to define what is called GST in Constitution. So they defined it as like GST is a tax. Okay, GST is a tax. It is levied on what? Levied on supply of, levied on supply of goods, services or both. Levied on supply of goods, services or both, except alcoholic liquor for human consumption. Defines GST is a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. Except alcoholic liquor for human consumption is a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. Sir, I have specifically said like, I didn't just said like alcohol, except alcohol. We said what? Alcoholic liquor for human consumption. So that means alcohol other than humans will the animals consume? No, it's not that way. There will be alcohol for industrial consumption as well, to produce certain chemicals, sanitizers like that. For industrial consumption also alcohol is used. For industrial consumption it is taxable under GST. Okay, it is covered under the scope of GST. But if it is for human consumption, then it is not under the scope of GST. So now someone will raise a question. So on alcohol there is no tax. No, it's not like that. On alcohol there is tax. The tax is levied by state governments only exclusively. So I am writing here, note, on alcohol exclusive right to tax is with, on alcohol exclusive right to tax is with state government. On alcohol exclusive right to levy taxes with state government. The levy state excise duty and sales taxes. Even after GST also this continues, sir. On alcohol, the exclusive right to levy tax, exclusive right to tax is with state government. Okay, so till now, what I said, sir, simple things. To maintain the autonomy of central and states, instead of a single GST model, a dual GST model has been introduced. Central will get their share, state will get their share separately. But whereas the problem comes when it is an interstate supply, because instead of one state, two states are involved. Then in such case, the tax called integrated tax is also levied. Sir, one point here. In interstate, we know that 50% will be taken by central government and 50% will be given to state government. To which state? There is a seller is in AP, buyer is in Tamil Nadu. So now this 50% of tax, will it be given to AP or will it be given to Tamil Nadu? It will be given to the state, destination state. To the destination state. So above here, sir, where we wrote interstate integrated tax, there I am writing destination state. Okay, so it will be given to the state government, that also to the destination state. Okay, so now to proceed further. So now to an extent the problem is solved, that central revenue is going to central, state revenue is going to state. Even the interstate transaction also they have somehow sorted out the situation. Then states, watched a Telugu movie called Businessman. In this movie, sir, in that movie called Businessman, Mahesh Babu, he has acted. And I mean, he has a famous dialogue in that movie, especially in Telugu, it is famous. So I'll translate it to English and I'll tell. So it's like, he says like, I mean, I'll tell you a quick short of the story. Sir, he's a hero who comes to Mumbai and again, he introduces mafia. So the mafia is already died, but this hero enters into mafia and somehow he revives the mafia. He'll bring back the mafia thing, and on every transaction he'll collect 2% as his tax. Okay, so now understand here, on every transaction he'll get 2% as tax. Now understand here, tax cannot be collected by any person other than government. That's why he's called as mafia. If government is collecting the 2%, now it's tax because it is as per constitution. But this is collected by other person, some other person other than government, this is called as mafia. So this fellow collects the taxes, then afterward he spends that money on a party, same as like the Pushpa 2 movie also. You see like Allu Arjun will make how much you want to become the chief minister, like that he'll give 500 crores or 1000 crores, some amount he'll give. Na? So the same thing. So in that movie also Mahesh Babu says like, I'll want to, if your party wants to become the prime minister, I'll spend the whole budget which is needed for you to win the elections and he'll spend that. Okay, so then they'll say like, why, what you want in this? So he says like, I'm not interested in money, I'm interested in power. Okay, the dialogue is, I'm interested in power, not in money. So state governments, the state finance secretaries, everyone watched this movie and they thought like, yes, we are getting our share of money from central government, but we are not having any power in this GST law. The whole power is going to the central government only, because if at all any exemption has to be introduced, if any changes has to be made, where state is involved, everything is taken care by central government. So we have been sidelined, outlined here. We are nowhere in the focus, or we are nowhere involved in the decision making. So states are not ready for it. They are saying like, we also should be there in the decision making process. It's not just you make a law and throw our money. Will not be accepting this. We should be involved in the decision making. Then again they thought, and they brought something called GST Council. GST Council. So this council consists of representatives of both central and state governments. They together decide and collectively they'll make a decision. So that decision, while taking that decision, it's not taken only by central government. All the state representatives are also involved. So there is the participation of even state governments also in that particular council. So to have that inclusiveness by all the people, they have introduced GST Council. And even this council also, it cannot be removed as per the wish and will of the central government. After 1 year or 2 years, if they want to remove this council, they cannot do that. That's why this this council constitution is also governed by constitution. So it's a constitutional body. It cannot be removed outrightly or on its will by the central government. It's a constitutional body. So we'll discuss now about the GST Council. So keep the heading Article 279A. It empowers the president. It empowers the president to constitute It empowers the president to constitute GST Council. It empowers the Article 279A empowers the president to constitute GST Council. So who constitutes, sir? Sir, all constitutional bodies are not answerable to Prime Minister. They are answerable only to President. So empowers the president to constitute GST Council. So council is framed by president. It consists of Union Finance Minister. Union Finance Minister acts as chairperson. Union Finance Minister acts as chairperson. So who is the current finance minister? You already know. So she has been trending in Instagram, social media from the past 2-3 months. From the moment she has introduced the tax on popcorn, the classification of popcorn, she has become so popular over the Instagram. Then considering the recent budget and some relaxation given to the middle class people by way of increasing the rebate they are going to give, and some slight increase in the slab rates in the new model. So she has been trending. Nirmala Sitharaman, she is the Union Finance Minister and she acts as the chairperson. And then Minister of State. Minister of State. Sir, Minister of State now don't think like he or she is from state government. No. Minister of State. Okay. They are also finance only. Nothing but these are deputy finance ministers. Okay. Finance ministry is a union finance ministry is a ministry which needs to cater so many things. So one ministry cannot consider or cannot answer all those things. So that's why there are some deputy ministers also under the finance ministry. So that's why Ministry of State of Finance, he or she is also a union minister who will act as member. Union Finance Minister acts as chairperson. Here it is a member. And from the third one, From every state, finance minister or any other minister nominated. Finance minister on any other minister nominated. From every state, finance minister or any other minister nominated. They will also act as member. So if you see how many members na overall total, the one who acts as chairperson 1, Ministry of State here 2. From every state, finance minister or any other minister nominated acts as members na. How many states we are having, sir? 28 plus 3 union territories which are having state legislature or also has to be treated as what? States only. So here there are total 31. So overall council consists of how many members, sir? Overall council consists of 33 members. 33 members. Okay. Then coming to the next point. To take a decision, 3/4 should be in favor. 3/4. Okay, to take a decision in council, 3/4 should be in favor. So 3/4 na, from these members 3/4 na, it's always the center states will only having more power. The voting powers are not based on the number of members. The voting powers are different. So to take a decision, 3/4 of voting power should be in favor. So how the voting power is given? Voting power. Central government alone has 1/3. Whereas state governments collectively has State government collectively has 2/3. Central government has 1/3 and state governments collectively has 2/3. So now you need to understand that central government alone cannot take any decision because it cannot have 3/4 voting power, only 1/3. I mean, in percentages, na 3/4 means how much? 75% should be in favor. Whereas central government has only 33.33, whereas states together are also having 66.67. So neither all the states together cannot take a decision if center is against it. The center cannot take the decision if only central is in favor of it. So central and majority of states should be in favor of it, then only a decision can be taken. Voting power. Then quorum. To call it as a valid meeting, there is something called quorum. %50 of members should present. Sir, here it's not based on voting power, sir. It's head count only. It's head count only. Not based on the voting power 1/3 and 2/3. Here it's based on the head count. Out of 33, at least 50% should come. So that means 50% na somewhere 17 members should attend to call it as a valid meeting. Next, functions of council. Functions of GST Council. Functions of GST Council. So what are the functions of GST Council, sir? Sir, understand, council is the ultimate deciding authority, but council on its own cannot frame a law, because as per constitution, the power to frame a law is only with the parliament or with the state legislature assembly. So even this council is a constitutional body, it doesn't have itself power to frame a law or to amend a law. So council, even though it is the ultimate authority which takes a decision, but that decision, it can be called as decision only it is made as a law. That power is only with the parliament and state legislature. So council, it cannot be called as the decisions taken by council, cannot be called as the real decisions of GST. They are can be referred as only recommendations. That recommendations will be implemented by the parliament or state legislature by way of passing a law. Okay, so the functions of council are like, it gives recommendations. It cannot directly give a direction or a decision. It gives recommendation that would be made by the parliament or state legislature as a decision. So functions of GST council, it gives recommendations. Recommendations. So recommendations on what? They give recommendations on tax rates. Sir, 6 points will come, sir. So arrange the paper accordingly. 6 points will come. Tax rates. How much should be the tax rate? Whether it is 12%, 18%, 28%, that recommendations will be given by council. And then exemptions. Whether a product needs to be, or a good or service needs to be exempted or not, that also will be decided by way of giving recommendations by council. Then threshold limits. To register under GST or to attract GST, what should be his turnover limit? I mean, on exceeding 20 lakhs turnover or 30 lakhs or 40 lakhs, that limits are even recommended by council. So recommendations on threshold limits. Threshold limits. And then taxes to be subsumed. They give recommendations on tax rates, exemptions, threshold limits, taxes to be subsumed, taxes to be subsumed. Na, the previous taxes, we have central sales tax, advertisement tax, luxury tax, doctorate tax, VAT, excess duty, entertainment tax, all of them are there. Na? So out of them, which needs to be subsumed, merged into GST, that is recommended by council only. Principles of levy. Principles of levy. Na? Sir, as I said, in the basic indirect tax mechanism, the supplier is the person who is responsible to pay the tax. Supplier is the one who is responsible to pay tax. That is the default mechanism called as forward charge mechanism. But there will be instances where instead of supplier, recipient has to pay tax. If the obligation to pay tax is on recipient, then that is called as reverse charge mechanism. So that principles of levy, whether on a transaction supplier is liable to pay or recipient is liable to pay, such kind of principles of levy are recommended by the council. Then date from when the petroleum products will be brought into date from when the petroleum products will be brought into GST. So the date from when the petroleum products will be brought into GST, from when these petroleum products will be introduced into GST, will also be given the recommendations. So that means you should understand, by definition itself, alcoholic liquor for human consumption is excluded from GST. But here, if you are saying like council has to recommend the date from which the petroleum product has to be taxed, na, currently petroleum products are not under the coverage of GST. So that means on petroleum products, no indirect taxes are not like that. On petroleum products, there are taxes, but which taxes? The taxes prior to GST, the central excise duty, sales tax, VAT, those are only continuing. On these also there is taxes, but not GST. So the recommendations of council will be on tax rates, exemptions, threshold limits, taxes to be subsumed, principles of levy, date from which the petroleum products can be brought into GST. So these are the functions of GST Council. Okay, so now we'll write down goods out of the ambit of GST. I mean, the below mentioned goods, sir, even though GST is a tax levied on both supply of goods and services, the below mentioned goods are currently out of the GST. So we'll see what are those goods which are outside the ambit of GST. Petroleum products, and then alcoholic liquor for human consumption. Petroleum products and then alcoholic liquor for human consumption. So what are the petroleum products, sir? HP man. Okay, so let me write down them. High speed diesel oil, petroleum crude, motor spirit, high speed diesel, petroleum crude, motor spirit, aviation turbine fuel, natural gas. High speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, and natural gas. High speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, and natural gas, and alcoholic liquor for human consumption. So these are the goods which are currently out of the ambit of GST. This can be called as even non-taxable supplies. Non-taxable supplies. This can be called as even what? Non-taxable supplies. Okay, so now we'll write some basic points, sir, which you already discussed only. we already know as well. So those key points which we didn't have written anywhere specifically, maybe along with the discussions of several points, we have covered them, but we didn't wrote them specifically anywhere. Okay, so those points also will cover regarding the introduction of GST. The basic points are GST is introduced from 1st July 2017. GST is applicable to whole of India, including the state of Jammu and Kashmir. It was introduced by way of amending the constitution. But which amendment? Constitution 101st Amendment. GST is introduced first in which country, sir? France. But we didn't adopted the France model. We adopted Canadian GST model. So this simple basic okay points only. We'll write down quickly. Okay, not there much also to discuss. If it's an inter student na, so I might have somehow explained and prolonged it for some more another 5-10 minutes. But there is nothing there, so we could write down them directly. You could understand them also straight away. So some key points regarding GST. Key points regarding GST. So see, first one, GST is introduced. GST is introduced by making 101st Amendment to the Constitution. Constitution. So after making the 101st Amendment, GST has been introduced. Next, second one, GST is applicable from July 1st, 2017. But Jammu and Kashmir, sir, any law, so not now, before how it used to be now, any law, even though it was applicable to whole of India, Jammu and Kashmir state used to have a special privilege like that law. Only when they want it, they will be introducing it into, they'll be introducing, otherwise they'll not introduce that. So GST applicable from 1st July, whereas from 8th July 2017 only it is applicable in Jammu and Kashmir, not from 1st July. I mean 8th July only their state government has accepted, or the state legislature has accepted to introduce GST. So from only 8th July, GST is applicable in Jammu and Kashmir. Then India adopted India adopted Canada GST model. However, Canada is not the first country to introduce GST. Which is the first country to introduce GST? And France. France is the first country to introduce GST. Next, fourth one. GST is a destination based tax. GST is a destination based tax. Since GST is a destination based tax, the tax revenue accrues to Which states are destination state? Tax revenue accrues to the destination state, nothing but na buying state. Destination state and nothing but what? Buying state. GST is a destination based tax. Tax revenue accrues to the buying state. Accrues to the buying state. Then fifth one. GST is a value added tax. GST is a what? Value added tax. So what does it mean? Value added tax meaning here. Due to set off. Sir, understand. GST is introduced by making 101st Amendment to the Constitution. It was introduced on 1st July, but in Kashmir, Jammu and Kashmir, it is from 8th July. India adopted Canada GST model, but France is the first country to bring GST. GST is a destination based tax because in an interstate transaction, the state share 50% will go to central government, the other 50% will go to state government. The share of state government will be given to the state whichever is having destination, nothing but the buying state or importing state. Okay, GST is a value added tax. Why value added tax? You know, in GST there is a concept of ITC. Due to ITC, at every stage, instead of taxing the whole amount, the value addition alone will get a tax at each stage. Instead of taxing the whole amount, the value addition at every stage will alone get taxed. Since the value addition alone will get taxed, GST is called as what? Value added tax. Due to set off of tax paid in previous stage, only value added at each stage is due to set off of tax paid in previous stage, only value added at each stage is taxable. Only the value addition alone get taxed, not the full amount. You're able to understand, right? So let me go back here, sir. I mean, when we discuss the taxes that are subsumed into GST, I have said like to leave some 6-7 lines now, so that lines will leave, will write down. Okay, so understand, sir, what are those points now? As I already said, that there is no excise duty now. Excise duty is subsumed into GST. But even after that, the central government has retained the power to levy excise duty on tobacco items. So on tobacco and tobacco products, even after introduction of GST, there is excise duty, the previous excise duty, and even GST. Sir, doesn't leads to double taxation? Yes, it leads to double taxation, but still it continues to be like that only, because who will question when there is double taxation on tobacco? You say like, sir, tobacco is needed for me, sir. Without tobacco, I cannot live. So it's an essential for me. So you cannot double taxation. You cannot do double taxation. It increases our cost. So that and all you cannot say, right? Because tobacco, alcohol, these things are sin goods. Nobody socially you cannot accept. You're consuming these goods, and that's your right. That you cannot say. Those are your necessities and all. So on tobacco, alcohol, there will be excessive taxation, sir. double taxations, all these things will be there, but still nobody can question them, right? Okay. And even in another way, even in the benefits of GST also, it will be said like, on this tobacco and alcohol, by levying these excess taxes and not giving these credits and all, it leads to double taxation. So overall, the prices will be increased. This sin goods price if increase also, but what is the basic economics formula which we have learned, sir? When price of a commodity increases, then the demand will come down. So when the price of this sin goods increases because of higher tax rates and this double taxations, ultimately their demand is going to come down. That's what government is saying. So it's a measure to bring down the consumption of tobacco, which is, and they'll say like, we are contributing to the welfare of the society by levying high tax on these sin goods, which ultimately reducing their consumption. So that's what the government is promoting. So that's why on a tobacco items there is still excise duty continuing even after introduction of GST. So write down, sir, here the first one. Sir, this is where yesterday I have clearly said like the taxes that were there prior to GST. So there I even said like to leave some 6-7 lines. There you should write this point. Central government has retained the power to levy excise duty. Central government has retained the power to levy excise duty on tobacco and tobacco products even after introduction of GST. Central government has retained the power to levy excise duty on tobacco and tobacco products even after introduction of GST. Then second one, since central has retained the power on things, state also has retained the power to levy taxes on certain endowments, certain things such as like opium, Indian hemp. All these are kind of drugs, narcotic substances, the psychotropic substances. Okay, psychotropic so which will take you into the trance. So those kind of drugs and all. On these, even after introduction of GST, sir, you may say like, sir, these are illegal now, we cannot sell them. To the extent they are permitted, maybe for medical purpose or some other purposes, if they are permitted, even on them also, even after introducing GST, still the state excise duty, no, understand there is state excise duty, central excise duty. Sir, even here also, when you wrote excise duty, right here, central excise duty, this alone is subsumed into GST, central excise duty levied by central government on manufacture of goods. But there is something called state excise duty, which is levied on these things which give you that kick. Okay, alcohol, these drugs and all psychotropic substances, all these will come under the state excise duty control or purview. So even after introducing the GST also, state government has retained the power to levy state excise duty on these items. Even now there is GST and even state excise duty on these items. So write down, state government also has retained the state government has also retained the power to levy state government has also retained the power to levy state excise duty on opium, Indian hemp State government has also retained the power to levy state excise duty, Indian hemp and other narcotic drugs even after introducing GST. Third one, whereas entertainment tax levied by third one, sir. So this point, entertainment tax here, if you see, there are two entertainment taxes. One is levied by state government and the other one is levied by local authority. In a state where entertainment tax is levied by state government, that was subsumed into GST. But if entertainment tax is levied by local authorities, example Chennai. In Chennai, the Chennai Municipal Corporation local authority will levy the entertainment tax on movies. So that entertainment tax levied by local authorities is still continuing even after introduction of GST. Only the entertainment tax levied by state governments is subsumed into GST. So entertainment tax levied by local authorities is still continuing. Entertainment tax levied by local authorities is still continuing. Okay, so 3 points, sir. On tobacco, even after introduction of GST, central government continues to levy the excise duty. On opium, Indian hemp and other narcotic drugs, even after introduction of GST, state government continues to levy state excise duty. Whereas the entertainment tax, if it is levied by local authorities, it is still continuing even after introduction of GST. Okay. So coming to our next part, sir. So now we'll be discussing about the concept of compensation cess. So we'll understand why compensation cess is needed. Then we'll discuss how the compensation cess is going to benefit. How the compensation cess is going to work. GST compensation cess. Example, sir, we'll take the state of Tamil Nadu. So why only Tamil Nadu, sir? We can take any state which has more production or more manufacturing companies. That states we can take. Example, we can take Gujarat, we can take West Bengal, maybe we can take Maharashtra as well. So I'm taking one state as example, Tamil Nadu, which is having more manufacturing companies. Okay, so we'll discuss here pre-GST and post-GST, and we'll understand why the compensation cess is needed as well. So assume pre-GST 100 units produced. Out of them, 80 units sold within Tamil Nadu, whereas the other 20 units, 80 units sold in Tamil Nadu, whereas the other 20 units sold in other states. 80 units sold in Tamil Nadu, whereas the other 20 sold in 80 units sold in Tamil Nadu, other 20 sold in other states. Now let's say each unit, on each unit, there is a tax at rupees 10. On each unit, let us assume there is a tax at rupees 10. Okay, 100 units. So I got just now an update, sir, that results got preponed. So initially we are expecting the results will be on February 21st, but now the institute has released a circular regarding that, stating like the results are preponed. They'll be announced on February 11th itself. 10 days early the results are going to be declared. So it's a good move from the institute, because the students will get an additional 10 days for them to prepare, for the students who write single group or someone, and even the student who is even wishing or targeting for June attempt also. Once the December attempt result comes now, he'll have that seriousness, like already the previous attempt related result also got released, so we need to act quickly. So such response will be there even from the student. So just now I have seen that. Pre-GST, 100 units produced, 80 units are sold within Tamil Nadu, 20 units are sold in other state. Each unit the taxable at rupees 10. Okay, so now pre-GST era, sir, other states na interstate CST will be levied, but that also, if you remember the points which I wrote, CST is levied by central government, but it would be given back to the state. Which state? Origin state, where the seller is located. That means for the 80 which were sold in Tamil Nadu, intra-state revenue goes to Tamil Nadu. For the 20 units which were sold to other states, revenue will come to Tamil Nadu. That means for all the 100 units, the revenue will be going to Tamil Nadu only, not to any other state. So the tax revenue equals to 100 into 10, they'll get some 1000 rupees tax revenue they used to get pre-GST era. Now post-GST, let us see what happened. Hundred units produced. Again, out of them, 80 units sold in Tamil Nadu, whereas 20 units other states. $80 units sold in Tamil Nadu, whereas the 20 units sold in other states. Then it is, what is the tax revenue, sir? Sir, post GST, these 80 units are intra, these 20 units are inter. On interstate, which tax is levied, sir? IGST. The revenue of IGST will go to which state, sir? The revenue of IGST will go to destination state, not to the origin state. So on this, no revenue. But on this 80 units, there will be revenue of 80 into 10, which is 800 only. So if you see, okay, I didn't write the tax amount now. Tax at rupees 10. So now if you see, from 1000 rupees, the revenue has dropped to 800 due to introduction of GST. Okay, so now the revenue has been dropped from 1000 rupees to 20 rupees, 800 rupees due to introduction of GST. You understand, right? So there is a revenue decrease. This thing will actually impact only the states which are producing more. If a state has no much production or less in production, more in consumption, they are not going to impact anything because of this destination based tax. But the states which produce more, because they'll produce 500 units, they'll consume only 400. The other 100 they have to sell to other states. Now they are going to get revenue only on 400, but previously they used to get on 500 units as well. So that's why certain states are having problem with introduction of GST, because due to introduction of GST, their revenue is going to decrease. So that's a problem for them. So to control this, to reduce this, okay, say solution has been introduced, which is nothing but compensation cess. Okay, so we'll write down regarding the compensation cess now, the description. Sir, when in exam, if you need to write regarding compensation cess, this not needed. I have written this to explain you why compensation cess is needed. Compensation cess is levied by central government to compensate the revenues lost to state government due to introduction of compensation cess is levied by central government to compensate the revenue loss to state government due to introduction of GST. So whatever the revenue loss they are going to have due to introduction of GST, that would be compensated by central government. So understand, if central government promises to compensate, they should compensate from the money they are having. It's not like that. Already on supply of goods there is CGST, SGST, IGST, considering intrastate or interstate. Now central is saying like we levy one more tax by naming it as compensation cess. Through that compensation cess, whatever the revenue central government will get, that revenue will be used to compensate the revenue of states, or will be used to compensate the revenue for states which are losing due to introduction of GST. So it is levied on intra as well interstate supply of luxury goods and demerit goods. Levied on intra as well as interstate supply of luxury goods and demerit goods, and it is in addition to CGST, SGST and IGST, and this will be in force will be in force till 31st March 2026. So it will be there in force till 31st March 2026. So afterwards, maybe it could be extended or it could be completely withdrawn as well. Okay. So to have an example on what value the compensation cess is levied, let's say the goods value of supply is 10 lakhs. On this, IGST has to be levied at 18 percentage, which is 1,80,000. And now you should levy compensation cess 10 percentage on the same value of supply. On what value IGST is levied, on the same value IGST also has to be levied. So don't mess up with the income taxes. Sir, in income tax, the cess will be levied on the tax amount. I mean on 1,80,000. But here in GST, the compensation cess is not levied on the tax amount. It is levied on the value of supply only. So compensation cess at 10 percentage, which is 1 lakh. So total invoice price would be 12,80,000. Okay. Then since we are having only 10 minutes time, sir, instead of starting a big topic, I'll complete the simple topic, sir, which is a very basic one. You already know this. At final level, if I discuss this thing now, you say like, sir, I have been studying this in inter level, DT I studied, inter I studied, sir, why again needed? But since it is there in material, now, quickly. So not more than 5 to 6 minutes it will take. Okay, we'll write down. Once we'll write down, again you need not to study also, it will get registered in your mind. So for that sake, we'll write down. I think you already understand about the concept which I am discussing. It's nothing but differences between direct taxes and indirect taxes. Quickly we'll write down 5-6 points only there, sir. Between indirect taxes and direct taxes. So don't write down like indirect taxes is teached by me, MDK, whereas direct tax is teached by BM Bhaskar Magam sir. Anyway, that is also a difference, but you cannot write that now. direct taxes, indirect taxes. In direct tax, the tax incidence on taxpayer. I mean, if you have income, you only have to pay tax. The burden is on you only. The liability is also on you only. But whereas in indirect taxes, the incidence, I mean, even though it is paid by seller, ultimately it would be recovered from whom? Buyer. So the incidence is passed on to buyer. So direct taxes. The tax incidence on taxpayer, whereas in indirect taxes, the tax incidence is on end consumer. In direct taxes, the tax incidence is on taxpayer, whereas in indirect taxes, the tax incidence is on end consumer. Next, direct taxes are progressive, whereas indirect taxes are regressive. Direct taxes are progressive, whereas indirect taxes are regressive. So progressive means what, sir? The graph will be in an inclining way. I mean, when your income increases, the tax rate will also be increasing like this, incline. Up to 4 lakhs, one slab, 8 lakhs, another slab, 12 lakhs, another slab, like that. 0, 5%, 10%, 15%. When your income increases, even the tax rate will also increase. That is called as what? Progressive in nature. But whereas indirect taxes, sir, they are regressive in nature. Regressive in nature, na, there will not be any change. Irrespective of rich, poor, whatever is their income generating capacity, the tax rate would be same. There is no change in the tax rate. So then that is called as what? Regressive in nature. Then direct taxes, there is shifting of tax burden not possible. Shifting of tax burden not possible. But whereas in indirect taxes, shifting of tax burden is possible. Shifting of tax burden is possible. Sir, what does it mean? On my income, whatever is the income tax, I have to pay on my own. I cannot transfer the burden to you. If there is such option, I'll be feeling happy. You only feeling the burden. But there is no such option for me to shift the tax burden to you. I myself have to face that burden. But when it comes to indirect taxes, a seller is the one who is responsible to pay, but always he will recover it from his customer, and this fellow will from his customer. So ultimately, the burden is shifted from one person to another till the end consumer. So in direct taxes, shifting of tax burden not possible, but indirect taxes it is possible. On what base direct taxes is levied, sir? The basis for levying direct tax is income generation. When there is income generation, that is the base to levy direct tax. Whereas the base to levy indirect tax is consumption. I mean, when there is buying and selling, that is the base. But whereas for direct taxes, the base is what? Income generation. The basis is consumption. The basis is consumption. Next. Here the governing body, the administrative body for direct taxes is CBDT. Central Board of Direct Taxes, the administrative body. The who will be taking care of the ground level implementation of direct taxes is by CBDT, Central Board of Direct Taxes. Whereas indirect taxes, it is by CBIC, CBIC na Central Board of Indirect Taxes and Customs. Central Board of Indirect Taxes and Customs. Examples you know here. Direct tax ka example income tax, whereas indirect taxes ka example it is GST and customs. Okay. So I hope you are in sync with me, you are able to write notes along with me, and I assume you are having proper clarity along with me. So if you have any issues also, you could reach out to me in the group which has been created for you. So there I'll be available. It's maybe not instantly, but afterwards also I'll be replying for that messages or queries whatever you post there. So I hope the speed is quite enough for you, and this speed is needed, sir. If at all you feel the classes are little faster, then we don't have any other option, sir. You guys need to cope up with this speed, because considering our syllabus volume and all, so this speed at this level of speed is much needed. If you feel like the class is slow, then maybe after 2 or 3 chapters, then we may increase our pace little bit, sir. Not much more, a little bit will increase our pace. But I'm saying, like, if you are writing notes along with me, you will not feel it as slow. Follow that. And every day, sir, spend at least 30 minutes of time to revise whatever we have discussed in the class. This 30 minutes will definitely give you an added advantage of you remembering the concepts much more well. Spending 30 minutes today is more beneficial than spending 1 hour, 1.5 hour afterwards to read this one. You spend 30 minutes, you'll remember this permanently. But afterwards, now you need to spend 1 hour, 1.5 hour for this to register in your mind. So it's up to you. I think all of you are wise people only. So you spend your time wisely. Thank you all. We'll meet in the next class.